It's happening again. One of the most explosive trends from the last bull run is showing signs of repeating its run, which pumped over 1000% in just 90 days in 2021. Many of these altcoins are beginning to wake up, but I believe that this sector will once again be one of the strongest performing narratives in this bull run. And if you listen closely to what I'm about to tell you in this video, I believe that you'll be able to hit some absolute monster trades which could set up your portfolio in 2024. And this has definitely been a big focus of mine in recent times in terms of the altcoins that I am accumulating. So, what's the narrative I'm talking about? Well, today I'll be discussing the L1s. Layer 1s are the market's favorite tokens, not just for retail, but also for VCs and investors. People could not get enough of Layer 1s. And just like we saw, tokens like Solana, as you can see in front of you, Luna, before it ended up collapsing, and AVAX explode last cycle. We're also seeing the signs of this happening again, of course, with Solana and Avalanche performing well, but also a lot of the lower cap layer 1s starting to wake up. Last cycle, layer 1s were the strongest performers in the market. Now, why were they the strongest performers in the market? Well, firstly, Ethereum was really slow and expensive, and Ethereum is still expensive and slow and has actually chosen to scale through layer 2s rather than doing it on mainnet itself. So a lot of these alternate layer 1s were labeled the ETH killers to try and dethrone Ethereum, and that was a really strong narrative. The second super strong narrative which propelled them in 2021 was this general feeling that we didn't have enough block space. Pretty much all networks were congested, gas fees were extremely high, so there was this ever insatiable demand for block space, especially with the anticipation of many users coming back into the market. And the third reason why layer 1s were the strongest performers last cycle is because the market loves infrastructure. It seems to be able to justify a much higher valuation in the billions or tens of billions of dollars for these protocols than it can, justify a dApp, like a DEX, a marketplace, a borrowing and lending protocol, etc. The market can justify placing infrastructure at a premium in terms of its cost, and so do VCs when they actually invest in this technology. So those were the reasons why layer 1s were pumping last cycle. And look, layer 1s are the fundamental building block of cryptocurrency. As you can see in front of you, you need layer 1 protocols to provide the foundation for dApps and applications to be built upon. This is the foundational building block of crypto. Of course, you also have your layer 2s. These are aimed to scale Ethereum. They operate pretty similarly to how layer 1s operate, with the main difference being these are still validating transactions on Ethereum, whereas single state layer 1s and monolithic blockchains that are built away from the EVM ecosystem, they rely on their own consensus. For example, blockchains like Solana and Nia, and other chains like Sui and Aptos have gone even further by reinventing their own programming language. They operate on Move. They don't operate on Solidity, which is the standard for Ethereum. So needless to say, layer 1s are very important, but are the reasons that they pumped last cycle the same as this cycle? Well, I believe mostly the answer to be yes. Maybe there isn't this crazy demand or panic for block space like we had back then, considering just the plethora of layer 2s and scaling solutions we've had hit the market. But this infrastructure premium that the market places on these tokens has not gone away. In fact, we've seen it in recent times with the launch of Wormhole pre-market. We've seen it with the launch of Starknet, which is a layer 2 solution. We've seen it with the recent valuations attributed to networks like Solana and Avalanche, etc. The market is prone to give these tokens very big valuations. So why does this matter in terms of investing? Well, it means the upside potential for these infrastructure plays is often a lot higher than your dApps. So when it comes to building a portfolio, and this was evident in my latest portfolio video, I always like to lean towards going down the route of investing a larger percentage allocation in infrastructure, for example, L1s, to give myself what I believe to be a solid risk-adjusted exposure. So you have to work out how you want to weight your portfolio, but what I've found is that these layer 1 plays, they do perform extremely well, and even though cryptocurrency is very volatile and you can get these major drawdowns, they tend to be a little less volatile than some of the other types of protocols in the market. So in today's video, I'm going to give you all my layer 1 picks And what I'm actually going to do is order this video in terms of market cap. So I'm going to start with the big ones that I like. And then as the video goes on, I'm going to get progressively more degen and give you some of the riskier lower cap layer ones that obviously have more upside. Then after that, I'm going to tell you what my accumulation plan is, so helping you on when to buy, because when you actually buy into these layer ones is obviously going to be very important for the return that you actually get on your investment in the market. By the way, if you're not subscribed but you want daily crypto alpha where I give you the latest altcoin opportunities in the market, trades, trading strategies, and more to help you succeed this bull run, then click that subscribe button down below and hit that post notification bell. And thank you to all of my supporters over the last few months. We've been absolutely smashing it, and let's continue to kill it in 2024. So let's start with the biggest ones, which are Solana and Avalanche at the moment. They've been absolutely pumping, and they've been really leading this layer one rotation. So Solana is a coin that I'm still very bullish on. I've been bullish on it for a long time. In fact, you can see here multiple tweets when Solana was between $13 to $20, when even when the market was turned against Solana, I was actually still bullish, saying that I was feeling optimistic about the future of Sol, saying that I was actually buying Sol for my spot bags. I was actually discrediting a lot of the FUD at the time in this tweet here when everyone was panicked about forced selling, and I said, look, this is being overblown and this is actually an opportunity. So everyone that has been following my Twitter content, I also did videos on Sol during this time. Congratulations. This has been one of our strongest trades of the bull market so far. But I still don't think the Solana run is quite over. Although it isn't technically at its all-time high, in terms of market cap, it is at its all-time high. And this is because throughout the bear market, the tokens were diluting. So this is actually a tip for you. When you look at valuations in the market, look at market cap on the higher time frames when you're comparing a token to its previous all-time high. Because a lot of the time, you'll be misled into thinking it hasn't made a high when it actually has. And in Solana's case, although we're not at a price all-time high, we're at a market cap all-time high, and that's very important. But I don't think it's quite over yet because the fundamentals are extremely strong, the community is extremely strong, the dev ecosystem is amazing, and if the bull run continues, like I think it will, we're going to have our ups and downs, but if the general trajectory is upwards, then I can't see Solana underperforming. In fact, I see it as a decent place to actually park some of the rotational profits, as I discussed in yesterday's show and my take profit video as well. So I like Solana, but obviously it's not going to be as attractive in terms of a 10x gem compared to some of these tokens that I'll discuss later in the video, because, you know, for Solana to 10x now, it becomes more difficult. But interestingly, Solana's kind of kicked off this layer one trade, but a lot of the other layer ones from last cycle are just slowly starting to kick into gear, like Avalanche, Fantom, some of the others I'll speak about later. They're at their much earlier stages in terms of their pump compared to Solana, which is encouraging if the other layer ones follow suit in terms of the Solana trade here. And one of the reasons why I actually think, in addition to some of the reasons I mentioned earlier that layer ones are performing, is because a lot of new retail is now coming back into the market. Crypto is reflexive, right? So as prices go up, the fundamentals actually improve. And as prices go up, the media covers it more retail jumps into the market as crypto is being broadcasted to more people. That results in sentiment improving. That results in, once again, you got this flywheel effect of the price going up. But when these retail come back into the market, they're oftentimes buying tokens that they resonate with. And a lot of these people, they wouldn't have touched their portfolio since 2021, maybe 2022. So back at that time, what were the tokens that were performing? It was the L1s. It was things like Solana, Avalanche, and Fantom that they would have observed being the strongest performers last cycle. So psychologically, it plays tricks on your mind where you want to get back into the tokens that you know pump the hardest in a bull run. And I think that's one of the reasons why this L1 trade has been expedited, because a lot of these people, as well as going into things like meme coins, they've gravitated back towards these tokens that they love. And that's why AVAX and Fantom have started to perform well recently. And it's no surprise that they love them, because last cycle, Solana and AVAX absolutely went on a tear. Even if you look at the rally, not from the very beginning, because I think that's misleading, but rather from the first major dip we had in the bull run to the all-time high. In just 90 days, Solana pumped 1,104% in just 90 days. And if you look at Avalanche, and this is after the first peak was put in, so after people thought Bitcoin had put in its all-time high, they actually went on another run. So I'm just talking about the second leg here. Look at how they exploded. Avalanche as well, from the bottom of that first pullback to the top, it pumped 1,320%. And this was a multi-billion-dollar protocol. And a lot of the other layer ones, they pumped even harder because they were lesser valued. So the lesson there is that when these L1s run, they run really, really hard. And that's one of the reasons why I think a lot of retail is obviously gravitating towards them right now. But obviously getting those 1,000+% gains in Solana, Avalanche, even like BNB, Cardano, it's difficult, right? Because they're so highly capitalized in the market. They're at, 20 bill valuations. In the case of Solana, the FDV is 100 billion. It's super high. So in terms of maximizing the L1 trade, the higher upside way to go about it, and of course there is some risk attached here, is to look down the risk curve a little bit and go for some of these layer ones that haven't quite pumped as much. And that's what I'm going to show you in today's video. I'm going to go in order of market cap, touch on some of the higher ones, not quite as high as Avalanche and Solana, which I still like, by the way, but go down the risk curve into the mid and some of the lower capitalized layer ones here on the list and give you an idea of what I'm currently looking at, because I do believe we are going to see that rotational pump where profits from things like, Solana, Injective, etc., they flow down into some of these lower cap L1s. So before we get into the list here, and then I'm going to tell you when you should be buying these layer ones, I want to remind you that if you do want to trade any of the coins I mentioned in today's video, buy them, sell them, whatever you would like to do, there's a link in the description below to BitGet, which will give you a $30,000 sign-up bonus. So one of the biggest sign-up bonuses currently available to new BitGet users you can claim via using the link in the description. So let's start off a little bit down the rankings from something like an Avalanche, which I'm really impressed with, by the way. I'm actually in an Avalanche long right now and a Joe long right now, as I mentioned in yesterday's video, because I really do like AVAX and especially what they're pioneering in the gaming space. Even things like Beam are actually subnets that operate on top of Avalanche. So AVAX is bullish. I'm bullish on Sol, but let's go down the risk curve because I know a lot of you are degens. NIA is one, although it's at an $8 billion valuation. I still think there's a lot of upside left here, so I'm not fading NIA because it has a few unique catalysts going for it. One of the catalysts is sharding, something that Ethereum has decided to stray away from in recent times. They've changed their strategy. NIA actually has integrated sharding into the main layer one. It's a high DAU chain. It is one of the cheapest data availability layers in crypto. It's actually cheaper than Celestia. Not a lot of people are talking about this. And it also has the AI connection. So Ilya, the founder, actually created NIA, fun fact, as an AI application before it turned into a layer one blockchain. So it started in the AI sphere, and then it ended up becoming NIA, and Illy's actually speaking at the NVIDIA conference, so that's another shorter term catalyst. But NIA is one that I do like, gives you exposure to AI, but also exposure to a non-EVM bet, because the thing with a network like NIA is that it's pretty much directly competing with networks like Solana in the sense that they're not going after the Ethereum wealth effect slice of the pie that a lot of other layer 2s are going after. They're trying to build independent blockchains with independent communities. And I think if you want to hedge against Solana or hedge against Ethereum, you want some diversification in your portfolio so there becomes room for, layer ones like NIA to actually balance out risk. Because if you own Ethereum, Arbitrum, Optimism, etc., yes, you're diversifying across a variety of chains, but you're kind of stuck within the Ethereum ecosystem. So if you want to diversify your weightings out a little bit, you can start allocating towards other blockchains like, NIA, Sui, etc. So I do like NIA. Let's move on to the next one, which is Sei. This is at an even lower market cap at 2 billion, but Sei has a very unique narrative going for it because it's one of the first parallelized VMs on the market ahead of the Monad release, which is obviously going to be absolutely massive. But Sei gives you exposure to the Cosmos ecosystem, and you can also stake it to earn airdrops, and it's an ecosystem that I like, and more importantly, even beyond the fundamentals of the token, because we know in a boron fundamentals don't always trump what happens in actuality. The price is looking really good. I mean, it's been in an uptrend pretty much ever since inception. It's been making higher lows, it's been making lower highs, and the fact it's been in an uptrend, it's a hot token, it's a new token, and it gives you exposure to the Cosmos narrative, the parallelization narrative at the same time. I think in terms of narratives, it's very well aligned with the general market sentiment at the moment. So that's why I do like Sei, and I do think this pushes higher in the coming months. I will tell you when I think you should be buying at the end of the video. But let's continue going down the risk curve here. One with an even lower market cap it does have a slightly higher FDV. What this means is essentially that less tokens are currently circulating on the market right now versus the tokens that are set to come onto the market is Sui. Now, Sui is one that at first I faded, but in recent times, I've actually started to come around to it because I've been speaking to a lot of developers, and what people are telling me is that the development experience on Move, but specifically the way Sui integrates it, is seamless and actually a lot quicker than typical coding on Solidity, which is the programming language for Ethereum and other EVM compatible blockchains. So Sui is super interesting because you're getting exposure to a new programming language, a pretty nascent ecosystem, but one obviously with a lot of backing, and one that I think has a fair bit of upside given the fact that it has a pretty stretched out vesting schedule. So this cycle, at the low float dynamics that it currently has with its low market cap versus FDV, there can be some pumpermentals attached to that. We know how tokens with low floats, tend to perform in the market when a significant amount of buy pressure comes in. Now, I don't know what the catalyst is going to be, but if there is a greater L1 rotation, Sui is one that's definitely on my list. They also recently launched a blockchain academy with the UAE University. You can see here that the founder was teasing parallel execution and parallel shakes. Something is cooking with Sui. So they have a lot of strategic partnerships seemingly that they're cooking up at the moment. And then you've also got Aptos, which is another bet on the Move ecosystem. I'm probably not as bullish at the 5 bill market cap, although FDV is similar on Aptos than I am Sui. But what I guess Aptos has that Sui doesn't have is the airdrop ecosystem. So this is actually one, as you would know, I've been airdrop farming. I've spoken about it in a couple airdrop videos and threads. There's lots to do on Aptos. There's going to be another round of airdrops, lots of applications airdropping. They've been a little bit nicer, less stringent with their airdrops compared to Sui, who were a little bit mean and lean with it. So Aptos is one I've also got my eye on. If I'm going into Sui, I want some exposure to Aptos as well. And some people are even saying Aptos April just based on the recent price action that we've seen. So those are some of the bigger ones. Let's keep going down the list. The next one is Fantom. Fantom is very interesting. This is one that I recently took up quite a big position in. I actually have a bigger bag in Fantom right now than I did in the 2021 bull run. Can you believe it? Not only that, my bag is probably 2 to 3x bigger, just in light of the fact that I have more money now than I did back in 2021. And I was also able to stack around the 20 to 35 cent region, which enabled me to obviously accumulate a bigger bag. And then when price popped to $1, it's pulled back slightly now. That obviously meant that it weighted up in terms of portfolio weighting. But there's actually a lot happening on Fantom right now. I don't think the Fantom run is over. I think it can go higher. My TA is telling me $1.60 is a very logical target from this level. And the reason being, they've got some major updates coming, some of which I've heard through the grapevine, which I'm not sure that I can actually talk about today. I'll let them announce that in the coming weeks. But the things that have been announced is the fact that Fantom Sonic has had a major difference on the amount of transactions per second on the network, achieving 10,000 TPS. I think one of the biggest catalysts is obviously the fact, as you can see, Andre Cronje is back. He's tweeting. He's the co-founder and architect publicly of Fantom, so not just building dApps, actually working on the core consensus. And that's obviously bullish for Fantom and the narrative of Fantom. And like Monad, Andre said, we haven't even started with the parallel execution meme. Very interesting. They're teasing the fact that they're going to introduce parallel execution to the network as well. But Fantom Sonic is going to be awesome. I can't wait for it. We've obviously had a few catalysts, not only Andre being back, but also the fact that you have potentially an airdrop / stablecoin also coming, which I'm hearing rumors of. So, I mean, an airdrop, which could act as stimulus, hype coming, Sonic, ecosystem grants, etc. There's a lot happening at Fantom, and at the valuation it's at, 2 billion, combined with the fact that there's a lot of people that are probably, as I mentioned before, retail guys that did really well in Fantom that are probably going to come back to the market and see it performing well again. I also think that bodes well for price. I did actually share this on my Twitter when it was around, March 3rd. So if you want to go to March 3rd, you can see it was around 53 cents. I said Fantom to $1. It did actually almost pump to $1. So we were almost up at 2x, but now it's pulled back slightly. So it's like a 1.6, 1.7x to this 0.86 region. So those are my thoughts on Fantom for now. Might do some more content in the future, but that one is on my dip buying list. And once again, I'll get to the accumulation plan at the end. Now let's keep going down the ladder a little bit here. The next one is EOS at a market cap of 844 million. This is one that I also like because it's unique. It's a layer 1 network technically, but it does give you exposure to a variety of deep in and AI applications, which are obviously super hot narratives in the market right now, like AI compute, data storage, Web3 streaming. They also have their nodes to enable you to earn income as well. So AOS, in my opinion, is a comprehensive bet across multiple pretty key verticals in the market. They're also working on a lot of cool products which will be shipping in Q2, Q3. And at the valuation they're at of 844, it's not crazy. Obviously, it has been pumping massively in recent times, so you do have to be wary of that, of course. I can still see this if the layer 1 trade does end up panning out, going a lot higher, because the thing you got to recognize is all layer 1s in that environment are going to reprice. So the lower cap ones are going to reprice even more aggressively because it takes less liquidity coming into them for them to increase. That's just the basic rule of crypto and market caps, right? Although what you have to be aware of is if things go the other way, so if there's a major dip, the lower market cap layer 1s, they get hit the hardest. So it's not a free lunch. You do take on more risk as you go down the risk curve versus something like, an AVAX or Solana, which probably won't pull back as much as some of these lower cap ones. The next one is Zeta Chain. Zeta Chain is one that I've recently started to take a small position in. It's at a $480 million market cap. It's got some big backers, as you can see, CMT, GSR, Jane Street, etc. Raised $27 million, and they recently also did an airdrop as well. It's an interesting play because it's essentially multi-chain interoperability. So what they have is the ability to deploy omni-chain smart contracts. So smart contracts that are executable across a multitude of chains. So it's really cool and has a distinct market advantage for that reason. And the final one I want to discuss today before I get into my buy plan with a lot of these L1s is ALF. Lithium is also one that I've recently started to DCA into. It's a proof of work consensus mechanism similar to something like Casper. And for me, this is valuable diversification because a lot of the blockchains that I have in my portfolio are proof of stake. There are a few reasons why incorporating some proof of work protocols could be a good idea. One is obviously regulation. If you start seeing a bunch of proof of stake FUD with the SEC, etc., this can just be a way to hedge. That's not the primary motivating reason that I bought Lithium. But it's one of the reasons. The primary reason is because I'm seeing a lot being done on the ecosystem development side. As you can see in front of you, a lot of new protocols are launching, NFTs, launch pads, etc., DEXs, DeFi stuff, also beginning to launch games. So I'm just seeing a little bit starting to happen, people talking about it, smart people as well, which is important. So just considering the market cap that it is at, it's very low. Obviously, take this with a grain of salt. There is more risk here. I just believe in terms of going down the risk curve, this is one of the better ones that I found in the $1 to $200 million region. But there are many more. If you scroll down, you'll probably find, if you go into CoinGecko or CoinMarketCap, put in layer 1s, you're probably going to find a lot of lower cap L1s that are quite solid. I just gave you a few that I'm looking into today, and I've seen actively building cool stuff. But A0 is another one that I find interesting, Chromia as well. So there are a few if you scroll down and spot them, but those are the ones that I've been paying attention to. Obviously, if you stick to the bigger ones, you're taking on less risk. It does limit upside slightly, but that's why I really like the idea of going in this 15 to 50 to 60 market cap region. Things like Injective, Nia, Sui, Fantom, those sit at a really nice market cap for my risk profile, but obviously your risk profile will be a little bit different. So let's go and talk about what the accumulation plan is with a lot of these layer 1s. Now, one thing I'm going to tell you is we are currently entering a pretty critical phase for Bitcoin. Typically, we do see this danger zone pre-halving. What this zone represents is an area where you do see a steep Bitcoin pullback prior to the halving. Now, the pullback is already in motion at the time of uploading this video. We have seen a retracement from, I think we pumped all the way up to 73K and we dropped to around 66, might be 67-ish at the time of releasing this video, but we've already pulled back quite a bit, right? Can Bitcoin pull back to 60K? Absolutely it can. So you have to be prepared with your accumulation plan to be able to withstand a deeper correction, because they do happen. I just want to be very clear, and this is a major opportunity, by the way, but they do happen in the lead up to a new Bitcoin all-time high. I mean, even in the midst of the cycle, I'll just disregard the major one that happened in March. You had a 20% drawdown, followed by a 25% drawdown. After the first major bull market pump, we saw a steep retracement of 30%. Then, near the first peak, we saw, and this is just on Bitcoin, a retracement of 25%, then a massive retracement of 50%. Like, you see these big drawdowns, right? And if you want to zoom in even to this pre-halving region, we saw multiple big drawdowns happen pre-halving of 20, 30, 35%. Now, if Bitcoin goes down 20%, altcoins, a lot of them are going to go down 40, 50, 60%. That's not to freak you out. That's just to tell you, you've got to be prepared with an accumulation plan in the event that we get these dips, because the road is not going to always be clear. There are going to be times where sentiment shifts negative for a week or two, prices dip, and that's your opportunity to accumulate. Dips in a bull run are golden opportunities to accumulate. So my buy plan with a lot of these layer ones, I obviously have positions in a lot of them, but I don't have full positions in some. And I'm always looking to accumulate more if I think prices are going to go higher. So for a lot of them, I'm waiting for big red days, extreme red days, where I'll look to deploy some of my stable coin capital back into these coins and some of the other coins I mentioned in yesterday's video. I'll link it in the description, which is my overall accumulation list, because I believe by utilizing dips in a bull run, I'm able to lower my cost basis, get more attractive entries to actually ride up to new all-time highs in the altcoin market. Because I'm still extremely bullish on what can happen this cycle for altcoins. I'm just cognizant of the fact that we will get major drawdowns, and I'm trying to tell you now, because I don't want you freaking out if we do get a 20, 30, 40% drawdown and you're like, Miles, is this the end? Is it over? Like, no, that's very normal for a bull market, especially the early to mid stages of a bull market like I believe we're in, somewhere between phase 2 and phase 3, as I said in my take profit videos a couple days ago. So for a lot of these layer ones, they are market dependent. They won't run in isolation. If Bitcoin and alts are crashing, these layer ones, they're also probably going to go down in price, and the lower cap ones are going to go down even harder. That's not to freak you out. That's just to tell you, take advantage of these dips to accumulate. If your goal is to build positions, build them on red days. Don't build them on green days. You should actually be taking profits on green days, buying back into the market on extreme red days. And the other thing that I want to mention, a little bonus tip for everyone here that's still watching at the end, is if you are really bullish on one of these layer ones, you can go even further by allocating, let's say 10 to 15%, sometimes even 20% of the capital that's going into the base layer one into the ecosystem. So if you're really bullish on Sui, you could put, let's say, out of a $10,000 position, $8,000 into Sui and $2,000 into the ecosystem, because that's going to give you some exposure to the greater upside if that ecosystem really pays off. I know on Solana, this really paid off with a lot of those protocols. AVAX as well. Like, even recently, we've seen Joe outperforming. It's a DEX on Avalanche. So although I think the L1s are generally the better risk reward trade, I just wanted to remind you that going into the ecosystems is also something that you should consider doing if it has a good ecosystem. If it doesn't, you can just play the layer one trade. So I hope you did enjoy this video. I'll keep you updated as I find new layer ones. If there are any that I missed, let me know in the comments below. There were some obvious ones that I didn't talk about too much today just because I needed to be selective, and I can't pick every single layer one. But the general trade isn't reliant on my picks. The general layer one trade is more of a theory that I'm presenting to you that, look, this happened last cycle. It's probably happening again. And these are probably going to be some of the strongest performers this bull run. Because remember, crypto is more about narratives than it is individual altcoins. The sooner you realize that, the sooner you're going to make a lot more money in this market. I'm going to see you tomorrow for a continued streak of daily uploads. Wasn't going to upload today, but I said, no, I have to keep the streak going. So I'm going to see you tomorrow. I actually did get a haircut, as you can probably notice. I actually don't need to wear this hat anymore, but my hair is looking messy, so I'll keep the hat on for today. Maybe one day I'll take it off. I'll see you in the next video. Hope you have a lovely rest of your day. Peace out.